Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom. We go into the charts. And as it stands at this moment, we have been seeing some consolidation and rejection off of the 0.65 of the pitch fan mean reversion path to the upside, and possibly getting a rejection off the 618 to come back down into some support levels, key support levels of daily candle time frame closes, which you see as these yellow zones, which I have marked off in the charts here. And we are currently trying to confirm these as support on their previous break to the upside. So let's go take a look at also as it stands right now, just to give you a key update on that fib level. We are currently seeing a potential come up into this region in the next 48 minutes. If we cannot close a candle into this region above the 30,553 region, this could be a bearish retest to come back down into this region. Just to note, you got a shoulder, head, possible shoulder to the downside here, if you do say so myself. Shoulder, head, possible shoulder, and you could be seeing this possibly play out. You never know. Let's just go into the liquidity and take a look. Okay, so as it stands, what is the liquidity? Well, it's when people lock their liquidity into the charts to be burned to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait, or whether they were burnt to a crisp. We get to see those too, thanks to 𝗥𝗲𝗹𝗁𝗲𝗀. So please take a moment to hit that like button and subscribe if you haven't already. And yeah, so anyway, previously, as we were coming down into these regions, they do come back and grab these 100x shorts. They really don't want the 100x shorts getting paid today, so they came back, these $80 million 100x pools. They came back, gobbled them up, and then slammed to the downside, and then also came and took these 100x shorts, took them out, and then we're currently seeing this potential rejection down out of here. Do we see, by the way,
fatality.
So are we going to come back up to these 50x pools and take out their partners in crime up here? There is some thick liquidity up here at 236 million, which they did not come back to get at 31,197 or 31,2. They did fatigue yesterday up in this region and start to come back down. The reason for that is we have to go to the higher time frame to see the liquidity, which we are forgetting to Father Time. We're also forgetting these little bubbles, which will not be here tomorrow. What is this? This is a 1, 2, 3, 4, 5 days. It looks like they lowered the days here. It used to be 6 days of data, but now it's 5 days of data on the 1 minute time frame, which is why we need to expand our vision to the external liquidity pools. Shout out to everyone here. Boom, boom, boom. And let's go into the 7-day time frame. So the 7-day time frame does suggest we come lower to the 29.6 and 29.4 region. You got about I would say about $20 billion or more just chilling down here and when sweeping the lows. So the imbalance is to the downside in terms of liquidity on the 7-day, although if the marionette strings might not be powerful enough if we start to expand our vision to the higher time frame, and you see those characters up above here at 31.7 and 31.6, the $30 billion up here could be beckoning to the upside. I suggest that we come down and take out some of these 50x and 25x and sweep the lows of these guys before a significant move up in this region is had. They're most likely paying them too much, which is why we're starting to bleed out, and so they're killing the shorts at every time they can before coming to sweep those lows. That's my story that I've been sticking to, and we're gonna see if that plays out. We're also seeing this $15 billion down here on the 1 month time frame and 10 billion here, so $25 billion chilling down at 25.4 on the monthly time frame. That could be coming down to sweep that for some real divergence on the larger time frames like the 6-hour and the 12-hour, which has yet to reset the Williams, which we'll get into in a minute. So if we go to the 3-month time frame, we're also seeing that these pools to the upside, this path to the upside seems secure and set in stone, but we're waiting for that smooth entry off the divergence if we can print some and before we take the long. So we'll see if that plays out or not. It looks like they're trapping the early longs as we speak, so we'll see if those early longs get wrecked or not. All right, so on the 6-month time frame, you do have that path to the upside paved up to 32K. We've been talking about it for a few days now. So 32.8, I believe, is the thing. We'll see it on the 2-year time frame in a minute, but you got near the $100 billion at 32.1 on the 6-month time frame. If you go to the lower pools, you do have a good $75 billion all the way down to 28.8 to be taken out if we sweep the lows that far on the 6-month time frame. And even lower, you have this thick band of 100 billion plus at 24.6 and 24.3. They are in profit, so scaring them up if they move their stop loss into secure regions, like if they think this is support and they move their stop loss into profit, they can kick out those traders before moving higher. So this could also be viewed as trying to get these guys to see fake support structures, which they move their stop loss into profit on, which kicks them out too, because they are most likely tired of paying people like this. If I were a market maker, I would be doing that anyway. So if we go to the 2-year time frame, we skip the 1 year because it takes out this consolidation range from May. We lost that in the last few weeks. So as we zoom in here to the pools above, we have near $100 billion at 32 even, 159 at 32.4, 159 at 159 at 32.4, 139 billion at 32.8, 138, 33.2. So you do have these thick pools just beckoning to the upside on the external liquidity pool. So please do be careful on shorts. Look for the entries and stick to your guns on your entry levels if you do have them. So if we go to the lower time frames here, whoa, what's going on? Why is it not showing? Let's see. So on the 2-year, you have 27 billion down to 29.6, 90 billion at 29.2. If we do sweep those 50x guys that they came up here to pay, then they could go and grab these external pools. The external pools have been there since before this move to the upside, so they're not going anywhere anytime soon. If they do sweep this area, these guys will still be open. So let's go to the monthly time frame and get into the charts and not waste a single more second of your time. All right, let's see, what are they pinging in at the moment? The dollar is also having a rip right now, so we're seeing what the dollar is doing. Are they going to go up into these pools on these 50x characters? As it stands right now, these guys are still on the table up at 30,614 just before we go into the charts. All right, 41 minutes for that 4-hour candle close. So is this an A, B, C to the downside? We'll leave that there for a moment. So we have both projections here. We have this impulse retrace 236 entry for the short idea in play, and also we have the bullish area for the 236 bullish area in play with the liquidity pools on the external range that we talked about up here at the 706. So which one is the move for today on Wednesday, June 29th? Okay, so let's go ahead and throw on our oscillators and see what we see. Boom, boom, and boom. All right, so what is this? Link in the description for more, momentummaster.info. Scroll down to features, toggle everything with the toggle switch if you like, and then also hit the nice buttons to read about each component if we go over them. So as it stands right now, we're seeing the curvature of the 4-hour cloud, which we've been talking about. It is starting to curve up here as we're getting this volume here, so this could be negated. We're going to remove the bias and take this off for now. Let's just start fresh and see what we see. This also was a 6-hour cloud, which did see some more volume enter here. So as you see, this has been entered fresh since yesterday. So this is also good to see. So that angle is not necessarily going to curve just yet. We are reclaiming some of these bearish trend-based fib levels. If we can close the candle up above this 0.65, then this could bounce us up out of here. We are currently getting wicked off of the suppression level of the 6-hour time frame. If we go to the daily, let's make our descent down into the time frames here. We're currently beneath the slim boy of the baseline, of the thin baseline here, and this could be, if we come below this, then this will start to shift this and possibly bring a cross down event. As it stands on the stochastic, we are getting overbought and coming down ever so slightly as we go sideways for the last 4 days. And the Williams is coming up to that average. The average is coming up to the Williams at that point we talked about over the last 2 days, and we used the 22-hour as that preemption idea to show you how that comes up like that. And then you get that alarm cross, and as we see it right now, we're kind of holding this and could potentially curve up here on the 22-hour. The money flow is coming down with the RSI in a manner here, curving back up. Not just yet. We did see that curve up yesterday with the 4-hour play, but it took some time for that deviation to play out. So does this just fake out before opening up some more and coming down on the Williams? The Williams coming low with the stochastic is what you want to see with the 22-hour, similar to here, where you get this in this nice zone. Let's see what was happening at that time. And then you saw this bounce for 11%. And then let's do it again. We had another low rising sun event here, and then we saw that rise to the upside here for 26%. So ideally you want to see the Williams come down some more and not just take stochastic RSI at face value, or you could be some of these guys buying at a premium that as it comes down. Could it go up to 31.5 and beyond? Yes, it could. I'm ready for that, but I don't buy on a premium. I wait for it to come down to a key level personally. So if we go down to the 12-hour time frame, we will see that the alarm is crossed on the Williams, which is potentially causing this suppression to occur of the takeoff of this. You're seeing the money flow also deviating away from the RSI in a similar fashion that it did to the 4-hour. So we could see a 12-hour money flow insurgence of money at some point with that deviation in play. When these deviate in a similar fashion here, as you see here, this deviated in a manner. It started the deviation back here and then just kept dumping all the way down in Friday, April 22nd. And then you started to get the baselines beneath the price with that deviation, and that's your ideal entry with the Williams double bottom fertile crescent at the base of the mountain here, and getting that surge up on the 12-hour time frame. So ideally you want to see the baselines scooping up beneath the price, as we say all the time, with that deviation between the money flow and the RSI and the double bottom on the Williams. Do we have that now? No, we do not, which is why I'm not really interested in longs. If you just look at simple indicators like the stochastic RSI, you could be duped into a long at this time, but me personally, not so interested. If we look into the 12-hour time frame, we will see that this is starting to curve in a manner here. What do we mean by curve? Well, as you see here, it is curving, suggesting a slight pause on the 12-hour volume. Does that mean it will dump out of that? It doesn't mean anything. It just means the pause. When we see that pause occur, as we did back here with this curvature, it preempted this move out of here. So do these pauses should just give you pause to think about whether this is going to reverse in a manner here or not. The Williams cross down event with the alarm here also had you at hello up at this level at the 236 entry. We've said these 236 entry models for some time now for shorts in particular. So are we going to see this come down? Naturally, you meet with resistance at the 0.65706. When they open up the 706 trap door, they open it with a fury, and then that's when you should see the gap to the 1 or the 1382 level. But until you get that permission granted from the 706 region at 30,208, it's not on yet. So if we go to the 6 hour time frame, well, let's go to the 8. Sometimes I like to look at the in-betweens at the 8 hour. Not back testable enough to put into the formula, but interesting to note nonetheless. You are seeing the money flow come back up to the RSI, similar to what happened with the 4 hour time frame, the deviation correcting itself and potentially getting some suppression as it crosses down with the Williams coming down on you. So that Williams coming down is like water pouring out of a faucet onto the momentum streams of the stochastic perhaps, and you're getting this cross down event also still suggesting a push down of sorts. Once again, we talked about how this occurs yesterday. We said there's these cross down events, and just because they cross down doesn't mean it needs to play out immediately and then even could reclaim and go up. But even with these cross down events, you do get some hard rejections that give some fair percentile to the downside. So that's all we're waiting for, is a sweep of the lows on that. Not asking for much, just asking for a sweep of the lows while it resets the Williams and all that fun stuff. So similar to back here on March 22nd. Are we going to see the same thing? If we go here, the Williams is starting to come down here. Are we going to see a stab at the lows, which we tend to do sometimes? Could be the case. If we go to the 6 hour time frame, 6 hour time frame started to take off, got a rejection off that 236 yesterday, and that rejection was an interesting thing to note, and seeing this ABC wave possibly coming to fruition. You did have hidden bullish divergence on the money flow here, which started to come back up in a manner here, and now you're starting to see this in 2 hours time. You are getting this Williams to come down some more. Ideally, you'd like to see it come into the fertile crescent of oversold regions where it starts to turn green here, and ideally double bottom. This region, not an interesting point for me per se. Yeah, so the 6 hour still has some room to come down, potentially speaking, as you get rejected off of this thin boy baseline. The one thing to look about this wick, this candle, is we can measure using a fib retracement tool from wick to wick. We can go up to the top of the wick, switch this to basic, and if this holds in the 382 region at that 30,301 level, if it holds and maintains that, that could be a bullish candle on the 6 hour time frame, which could suggest upside. Tomorrow is Thursday. We're reaching Thursday my time in Asia already, so at the end of this day we could see midweek reversal. Do we see a stop loss hunt before we reverse out? That would be the ideal play for me personally, where they fake out and then go down before they reverse up in a similar manner, where they would have, you know, an inverse head and shoulders out of there. So let's go into the 4 hour chart and start to see some narratives on that. 30 minutes for the 4 hour cloud to close. As we liked to have seen, we saw that we pierced down beneath the cloud. This could be the bearish retest to continue lower. So this could be your bearish retest to the downside for the 4-hour time frame. If you close even bullish, this is kissing and getting rejected off the cloud, which is curving in a manner which is suggesting a taper here on the momentum for the 4-hour time frame. Even though you are getting some sort of play out here of this, you saw Rainier pointed out the disparity here and the bullish divergence that came to pass, bouncing off the cloud here to the upside, getting the rejection off the 236, coming back down, and now your money flow is above the RSI, interestingly enough, and we didn't go anywhere from that playing out. So this was just a stop loss hunt for the shorts yet again. So they came back up, ate all of these shorts, and they weren't even in that much display. The shorts were very weak. I've been noticing the pools thin. So you had some $300 million pools that we've lost to Father Time before on the left here, come to $236 million pools, come to $134 million pools. You had another big pool here, but basically a lot of small pools of shorts in the 100 million, sub 100 million almost. So the shorts are getting scared. Are the longs still open in their trades? Are they going to come down to here? It does say you're imbalanced by 6 billion in shorts, but that's in this frame of 4 or 5 days, forgetting all of the longs that are open below. So you could come up into this region once again to get these 50x characters, and as it stands right now, there's not many longs opening up here. So we'll see how this candle closes in some time here. Based off the momentum here on the 4-hour cloud in 28 minutes, seeing this close, I would like to see it get more of a rejection beneath 300 and not see the bull hammer that is forming here on the 4-hour time frame. For me personally, wanting to see the sweep of the lows. Okay, so if we go to the hourly time frame, let's take a look. So we're getting the double bottom kind of fertile crescent with the rising sun starting to play out here, with the hourly starting to come up to a level here, 74 level on the stochastic. We still have some, looks like we're coming back up for another stab at the 400 level, getting that cross up event with the baselines beneath the price. So if you're looking at the hourly play here and you took this based off of the adaptive level here on the hourly time frame, if you just forget everything I said and just looked at what the hourly was giving you, the hourly had this adaptive holding bounce idea, not once, twice, 3 times bouncing off the adaptive moving average here and the bottom of the Keltner channel. So if you just played this as a single play zoned into the hourly time frame, this hourly play had you at hello so far, and this gave you a nice little percent and 1.6. and if you see this still rising sun potential playing out in the next 26 minutes, it depends, like we said, if the 4-hour candle closes above that 300 level, basically this fib level, then you have a bull hammer on the 4, which could trigger some algos to push you up. The one thing that is interesting nonetheless is this cloud tapering and thinning in a manner here. We are starting to see this thinning of the cloud, suggesting the volume is not super present, even though we had this move to the upside. If we look at the PVSRA strategy, we have some red selling volume with some green vectors that got sold off. So this could be a stop hunt volume candle, and there's no volume backing this rise up right now. So this could be just to come take out these shorts, or to prevent the shorts from feeling the urge to enter and to ping some more liquidity on these pools. Okay, so, but as it stands right now, the baselines are holding beneath the price, so this is what you like to see for a scalp long on the hourly time frame. I'm not interested in it personally. I am interested in the long-term plays up to here in the 32K region. I just think that's something we're not seeing in the foreseeable. It will take some time to get there. Let's just put it that way. So we're getting the hourly potential of a rejection point off of this weighted moving average. This was previously support. We broke down under it. This is coinciding with that cloud idea. If we can stay beneath this, it looks like we're coming back above. And you have this cross up, cross down idea on the 4-hour cloud. So it looks like it's the 4-hour. What does the 4-hour cloud idea want to do? Do you want to see a rejection of the cloud and this bearish retest continuation? Let's go back and see where things like this occurred before. All right, so here we came back, the cloud, we broke through it, we came back, bearishly retest, boom, dropped. So this was quite thinner than here. This cloud is much thicker. So let's go find a thick cloud with the same idea if we can. We can't find it for whatever reason. It's not the same thickness. But either way, you have this idea where you break down, you come through the cloud, you try to find it for support, you break down under it as it's curving, and then you bearishly retest and fall down out of it. Okay. Same here, you have the curvature, you broke down, you reclaimed it, came back, it thinned, you bearishly retest, dropped down out. And that's all you need, is that sweeping of the lows, equal lows here, and then you were out. So I'm not asking to reclaim all of the candles. I'm just looking for a logical level which takes out previous consolidation zones. Traders that are still in the trades that have yet to take profit in this region. So you have basically 6 days and 16 hours of longing people that have longed in this region. Some of them 50x, some of them 100x, some of them 25x, and some from back here that are moving their stops into profit, seeing support structures hold. So if it comes back as a trap to get them and then come out, then you have your shoulder, head, and your shoulder to continue to that region. Just an idea, and you'd be looking for divergence on that 4-hour time frame or more. So the divergence is currently already played out. You had divergence that played out there. Let's go take a look into the 15-minute and below. So you had this previous break through the cloud and reclamation. So it looks like you're getting the lower time frame boost here. So you had this lower time frame surge up out of the cloud, kiss the cloud, and potentially retesting the cloud out of here, getting the cross up event on the 15 and the hourly. So this is the 15 hourly play out of here. One thing to note that this is pumping in conjunction with was previously the dollar had came up to a region here. This is the bearish fib level. Let's go ahead and take a look. Are we getting that rejection off of these bearish fibs and also the bullish fib of the 6.5? Did people take profits here and reinvest them on the bearish sentiment for the dollar? We're still holding the bearish trend, super trend level unless this comes up. So the same thing applies. This is why we're looking for the retrace idea alongside this, still potentially getting that 12-hour push on the dollar. If you go to the NQ was getting this push up as well. We were trading that earlier today and looking at the S&P. S&P also bouncing off the cloud. All right, let's go back to Bitcoin and wrap it up in a nutshell for you. So we're coming back up to the 400 level. We're going to see in the next 20 minutes. I'm not going to be on for this. I got to get up early in the morning, so I will do some exercise and head to bed after this. But basically, you're seeing the cloud shift here on the 5-minute and the 15 and the hourly, so you're waiting to see what the hourly is going to do. This hourly close with the 4-hour coinciding here. Is it going to reclaim this cloud? As it stands right now, it is trying its damnedest to hold this level and provide itself a idea of a bullish hammer here. The 382 level at the 30,299. So also, if it does this, we're playing with this meandering of the cross up, cross down, cross up. The 4-hour is playing some funny games here. Definitely making itself tricky read today. But it gives you these if-then statements, and we were talking about rejections off the 236, and the cloud pierced down, and then it pierced the cloud as we said. So if you're paying yourself in profits as you do, then you could be looking to have taken some frugal gains of 2% with some nice leverage attached. What are they coming back to? What are they pinging in? Same guys apply. These shorts that are now in drawdown. So these guys are in drawdown here. $103 million at 30,614, and just a hop, skip, and a jump away at 30,705. So these 50x pools that opened up down here at 30,178 are in drawdown, experiencing some technical difficulties as they approach the liquidation point. Definitely not a good idea to short into support like that. All right, so as we lose these dots to Father Time, all of these will clear up and we will get a fresh sense of that. But once again, looking at the 7-day, the 7-day has that beautiful amount down below here to come back into once it comes and fatigues off of something to justify to come all the way up to 31,750 and everything. It looks like you would have to come down to these guys first, but what do I know? I know nothing. So this 4-hour candle now turning blue, which in the PVSRA strategy represents a stop hunt volume. So where did we see that before? Well, normally in the PVSRA strategy you get 3 green and 1 blue. So where do we have that? Green, 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 blue. And this blue is the stop hunt. So it had this stop hunt, stopping volume, and then it consolidated. And then they took their profits and re-injected a green vector candle here, boom. And then we saw a red sell-off of removing their position into the liquidations of the external liquidity zone, and then it's consolidated out. So are we getting this blue vector candle? Will it turn green as more enters here to try to break this zone? Four-hour attempting to turn up, giving some interest. So if we compare where we were from Monday basically took us down to take us into Tuesday, which took us up and then back down, and now Wednesday dragged us down a little bit, and we're seeing what that Fed meeting was about. Maybe they sold off in preparation for the Fed meeting and it wasn't as bad as they expected, so they're starting to reposition early. I don't like to speculate about news stuff. I just look at these charts. 5-minute and below, still 5, 15, and hourly, it looks like it wants to do its thing. They're starting to get their fatigue. 15-minute is ambiguous. Sorry, 5-minute is ambiguous. The 15-minute had its little bounce off the cloud as we suggested a moment ago. The London handoff seemed to bring this with it, with the London close, a surge up. You had that bullish divergence on the money flow and the RSI on the 15. Well, for me personally, I think that we've seen thus far the holding of the 236 until you can make it above 30,764. I'm not sold on this idea just yet. The 4-hour cloud is undeniably tapering, which, although the angle is starting to curve up ever so slight here, it's all about how this cloud situation in the next 13 minutes is handled, and it's not necessarily after the 13 minutes how it's handled too. So are we going up into this region and reclaiming the cloud or not? That is the question. If we do not reclaim the cloud, then we're coming down into these pools. If we reclaim the cloud and this daily support structure at 30,021 becomes the new support, then we are heading higher. This daily level at 30,021 is from back here. Let's go show you where that was. That was here. These two daily candles in May 9th and 10th are where I drew that support. And it also happens to be where we bounced off of on June 9th, 2022 and broke through on June 10th. So that's why I have 30,021 as that level. And then I have these daily levels up here at 31,393, and this has been there for some time, which is why we wicked up into that level and why we bounced off that level too. Support and resistance are interesting things to draw. I only draw daily ones. So it's reaching an ambiguous point. Ideally, this would want to come back into the oversold regions, similar to here. A lot could happen in the meantime where it meanders up and then comes down. You want to see this kind of stab to the lows before it gets to that region. That's where I'm interested in it. And that's my story, and I'm sticking to it. I haven't changed my interest zones, so we'll see. Does it take off without us or not? That is the question for today. Well, ladies and gents, I appreciate your time, and so I will not keep you for this close of the candle of the 4-hour. As it stands in this minute, it does look like it is going to at least close beneath the cloud and close in that bullish hammer idea. So where does that lead us in the next 4 hours after that and into the daily close for Wednesday? Interesting. Well, that's my story, and I'm sticking to it. I'm still interested in seeing these sweeps of the lows. Sweeps of the lows, please. That would be ideal for me. So thank you very much. Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same, bringing the fire, the accuracy, and the precision, and all that fun stuff, and we will catch you on the flip side. Peace.